Hello guys, I want to talk about my stock portfolio allocation rules. The stock market is dropping significantly today, so it might be interesting to talk about the strategy that you should follow in case of any situation, also in that particular situation when things are getting worse and you are at a roller coaster. So, some simple rules for my portfolio creation. So, buy a single stock for maximum 10% of your portfolio. I do not invest in any single stock more than 10%. This is only my initial purchase. If a stock goes higher than 10% of my portfolio and the business is good, I let this ride higher. This is important because any idea can be bad, so I don't want to be in a bad situation with my portfolio if my investment thesis was incorrect. So invest every month in best ideas. So every month I save, I have savings, and I put this money to my best ideas. And I don't care how the market is going, it's up or down. I simply want to find the best investments. So mixture of quality dividend and growth stocks. So I invest in quality dividend stocks like dividend aristocrats, and also I like growth stocks. So I'm not only interested in dividend, I want company that consistently reinvest in its business. So also allow myself some small speculative investment. Actually, one of my best investment was a speculative investment, and but also I have investments which went to zero. But I like to search for also some speculative thing. This is a small percentage of my portfolio. So focus on company's performance instead of macro environment. So I like also reading about macro news, but the main focus should be or must be the company performance, because it's hard to predict the macro environment. So also economists, they usually the prediction of the economists are incorrect. So holding period 10-20 years, you must have a commitment to commit this investment for a longer period. So you need to think like a business owner, like buying a property for at least 10 or 20 years. So this is essential for long-term investments. So keep your emotion in check. Yeah, it's easy to say, but if you have a market drop such as today, maybe you cannot control your emotion, but you should remain calm and reasonable person. You should keep also your emotion in control. If you cannot do that, you should not go to the stock market. But as I mentioned, it's not that easy. So it's easy to say, but when it's happening with your portfolio and you are seeing every day that your portfolios dropping several percentage, yeah, maybe you should not look at your portfolio at all. Just keep investing. So focus on business fundamental instead of stock price. This is important. So if the business is doing well, you should keep investing in that business. If the business is not doing well, you should sell even the stock price is high. So your you must base your investment decision based on fundamentals. Some example of my top five positions. I have several positions, so more than five, of course. but these are the bigger. Maybe I have too many stocks, but I'm comfortable with holding those stocks. So just a list of top five. So my first one is the top position is Philip Morris. This is excellent dividend stock that bought at reasonable price and planning to hold for longer period. It's giving me a nice dividend. So I recently purchased Alphabet. I think Alphabet it's a good growth stock and it's an excellent future, and I think I bought at fair price. My good investment was Build Your Dream. This is a Chinese battery manufacturing company, and my biggest surprise game. Actually, I wanted to invest in contemporary Amperex. This is the supplier of Tesla as well, but I could not because it's a China listed stock. But Build Your Dream you can buy also in Hong Kong as well as in the US as ADR. So that my top four it was Qualcomm, so bought at a very low price before potential Broadcom acquisition. So and I don't have a plan to sell this stock currently. My top five is AbbVie. I bought because of extremely high dividend at that time, and I plan to trim this position to invest in other better opportunities. So if you keep your position for a longer time, you will have an exciting journey. I think a great long ride, and you must enjoy your journey and keep investment every month or every year. And it is much important that you keep your emotion in control. It's much psychology is much more important than your financial skill. If you are scared, in the case your portfolio is dropping 5-10%, then you should not invest in the stock market, because if you are selling for for not fundamental reason, because of your fear or uncontrolled emotion, you jeopardize your long-term financial future. So I wish you a good day, and enjoy your journey and keep investing. Even this environment, you should think inversely. So if there is a bigger drop, your risk is lower, and you should invest actually more in that period. So thank you for listening, and I wish you a beautiful day.